The fear of missing out can stop you from becoming a consistently profitable trader. It can stop you from getting funded, getting payouts from your funding, and it can stop you from becoming a full-time trader. So FOMO is one of those things that if you want to become a consistently profitable funded trader that gets payouts, that does trading full-time and has a full-time income from their trading, you need to learn to understand what FOMO is, and you need to put some tools in place to be able to manage FOMO. That's exactly what I'm going to do in today's video. I'm going to share with you and give you a deep exploration of what FOMO is on a psychological level, why it's there, and what specific tools you can implement into your trading to ensure that FOMO doesn't influence and impact it negatively. Okay, so let's get into it. Now, let's talk about firstly what FOMO is, where it comes from, and why it's there, because it serves a particular purpose, otherwise it wouldn't be there. Now, FOMO, let's define what FOMO is, and let's explore that. The first definition I want to give you of fear of missing out is the fear of missing out on your own positive expectations in the market. After working with many traders and observing their psychologies and what's in their mind just before they take a position, and doing an enormous amount of self-review on my own trading, I found that we only have FOMO and the fear of missing out on when we are imposing our own expectations and beliefs and ideas onto the market, expecting something from the market. And you don't have FOMO if you don't have those positive expectations. So the moment you birth an expectation in your mind about what you think the market's going to do, it's going to go to this certain price in this amount of time, or this trade's going to get you your funded account, or this trade's going to get you X amount of dollars, or it's going to help you get recognition in your community. Whenever we create those expectations in our mind, even if they're subconscious or very quiet in the back of our mind, and you're not necessarily consciously aware of them, you're going to have fear of missing out on those. Okay, but if you learn to manage your expectations, you learn to quiet those expectations down, so too you learn to quiet down the fear. Because we only fear missing out on those positive things. Okay, so you birth those positive expectations in your mind, you're going to simultaneously birth the fear of missing out on them. Okay, now let's explore this a little bit more, because it's a very important concept to understand and discuss in your trading. And then at the end, I'm going to give you some actionable tools that you can implement right now to help remove FOMO from your trading. Okay, now if we have a look at your mind, in the future, you've got an imagination of what the future would look like, and in the past, you have a memory of what the past has looked like. And in the past, you have all these experiences that you're labeling positive in your trading, and maybe there's certain wins, or there's certain very profitable and very pleasurable moments in your trading, like for example, banking a certain profit or your first profit or getting your first funded account. And these experiences cluster into your mind as a very positive experience. This is what we're going to label an infatuation in the past. And we can have these infatuations in the past. And by the way, this center point here is you. And with these infatuations of the past mirrors forward into the future. And what happens is we create these expectations or fantasies of those things happening again, and an expectation of that happening again, and us regaining that pleasure. So that's the fantasy or the positive expectation or the fantasy that I was talking about. Now, the moment you have those positive expectations in the future, you all of a sudden create this fear of losing or missing out on those positive expectations, because you're associating much pleasure to those expectations or those fantasies. For example, it could be getting a funded account, or it could be a positive win in the past. By the way, these are mirrored from the previous, what you've seen in your memory, logged in your memory in the past. A positive win, a pleasurable win, a certain amount of money you've made, a certain amount of recognition you've gotten from taking a certain trade. And then what happens the moment you create that fantasy in your mind, you create the fear of missing out or losing that. You create the fear of the opposite, the fear of a loss, the fear of losing the funded account. Okay? So those fears are only there if you have that fantasy and you have that expectation of getting something. Okay? So, in other words, if you want to learn to remove FOMO from your trading, you have to remove the positive expectations. You have to remove the expectations on the outcome that you're imposing onto the market, because they come as a pair. The positive expectation is coupled with the fear of missing out and the fear of losing that. And the more and more you're seeking after that positive expectation, that benefit, then the more and more you fear missing out on that and you fear losing that. And really what's happening is the more you're trying to seek after and gain that positive expectation or that thing from the market, the more and more you fear missing out on it. And the greater the fear you have, I guarantee you, the greater the positive expectation or the positive outcome you're seeking or desiring in that moment. So you as a trader have full control over the fear you experience in the market and the fear of missing out, because what you don't realize most of the time is that you're creating the fear out of your own expectations, your own desire for a certain outcome in the market. So when we talk about actionable steps to be able to manage and remove fear from your trading, number one, you need to manage and remove the positive expectations, the benefits you associate to a certain win. And how do you do that? Okay, the way you do that is by having self-awareness in the moment of placing the trade, by asking yourself, what do I expect from the outcome of this trade? What do I expect the market's going to give me in this moment? And the more and more self-awareness you build up and you have a recognition of what you think the market's going to give you in that moment, then what you can do is you can bring a rational thought process to yourself in that moment, and you can remind yourself that nobody has any idea of what's going to happen next in the market. There are millions of factors influencing price of a certain currency or a stock or a crypto, and nobody has any idea of what those factors are at that point in time. So to predict the outcome of that individual trade is impossible. Nobody can. Now, we can have a good idea of whether we're going to be profitable or not over a large sample space based on a certain edge and based on a strategy, but on that individual trade, nobody has any idea. So when you have a certain expectation, if you remind yourself of the truth and you humble yourself and you realize that as an individual, you can't predict the outcome of the market. You can't predict what the market's going to do. And you humble yourself, then you realize that there's no point imposing your own expectations. And it's almost a self-exaggerated state of pride when you try and impose your own will into the market. No individual can influence price in that point in time. Okay? So build up that self-awareness in the moment of taking the trade of what you think the positive outcome or expectations are going to be in that moment. It could be you think that price is going to go up and it's going to make you this amount of money and this is going to get you closer to your funded account, or it's going to get you a funded account. It's going to take you out of drawdown. Maybe it's going to give you some recognition. These are all the expectations and benefits you associate to the outcome of a trade. The first step is being aware of what those are. And then the second step is humbling yourself and grounding these expectations by reminding yourself of the realities of trading, that nobody can predict the outcome of that individual trade. Now I have my free Bulletproof Your Mindset tool, which is in the description below, which helps you do that process. It helps you ground and humble yourself in those moments of taking a trade. And when you do, guess what? You have less of a fear. You don't have a fear of missing out, because now what you're doing is you're actually present with the market. You're seeing the market for what it is. And if the market aligns with your trading plan, you take the trade. And you realize that in that moment, you've made the wisest decision according to your trading plan. You stop thinking about the outcome of that individual trade. You think in terms of a larger sample space, and now you don't have a fear of missing out or a fear of losing or a fear of being wrong or anything like that in that moment, because you know you've made the decision according to your process, as opposed to making a decision desiring a certain outcome that you have no control over. So when you ground those expectations and you get present with the market and you take trades that align with your trading plan, then you no longer have fear of missing out. Okay? So it's very important to run through that process. Use the free Bulletproof Your Mindset tool in the description, and that will help become aware of the expectations you're attached to, which are leading to the FOMO. It'll help you ground those expectations, and as a result, it'll help remove FOMO. Now, another component here, it's very important to have, like I've mentioned, a clear mechanical trading plan, a clear plan that outlines your edge and that's mechanical. A lot of traders introduce fear and greed into their trading because they don't have a plan or a trading plan or a system, a mechanical system that they can follow. And when they come to the market, they're overwhelmed with decisions and options, and they create all these ideas and fantasies in their mind about how much money they can make. And all of a sudden, they become reactive to the market and the opportunities it's presenting, as opposed to them being, sitting down, looking at what the market presents, and when the market presents something in alignment with their edge, they act. So the more and more reactive you are because you're overwhelmed and you don't have a clear system, the more FOMO you're going to have in your trading. But if you take a step back, you define a clear edge, you put that edge into a mechanical trading plan, you know exactly what you're looking for in the markets, and you stick to that, and then you use the Bulletproof Your Mindset tool, the more and more you're going to remove FOMO from your trading. If you don't already have a clear mechanical trading plan, I've got my free 6-figure trading plan in the description below. Make sure you download that and use that. Now, another thing that's popping up quite often with my one-on-one coaching clients and that I'm working through with them is that you will have more FOMO and this fear of missing out and this fear of being wrong and this fear of taking losses and all those types of things. If you have this expectation on yourself that you have to be this one-sided perfect trader that catches every single move and that, enters at the perfect point and gets out at the perfect point, and you have these expectations on yourself that are unrealistic, and you're expecting to replicate your backtested results perfectly and capture every trade and enter every trade exactly and exit every trade exactly. And the more of an unrealistic, one-sided expectation you have on yourself to, perfectly enter every time and perfectly exit every time and catch every trade. And the more and more you expect yourself to be this perfect one-sided trader that's, always executing exactly as their back-tested results show, then the more of an expectation you're going to set on yourself, the more pressure you're going to have on yourself, and the more fear you're going to have of missing out and doing something wrong and not entering perfectly, not exiting perfectly, and you're going to beat yourself up. So it's very important to recognize that as a trader, you're going to have a level of human error. You're going to have a level of, missing out on a trade. You're going to be sleeping, or you're going to be socializing. You're going to be doing something else with your life. You're going to miss a position here and there. Or you're not going to enter exactly as your trading plan states. So you're going to not exit exactly as your trading plan and your data states here and there. As long as you're sticking to your trading plan greater than 80% of the time, then you're going to do quite well. And yes, you may not get 100% of what your backtest results show. You're not going to approximate your edge 100% of the time, but as long as you're doing it more times than not, you're better off. Okay, so it's important to recognize that in trading, that no matter what level you're playing at, there's going to be a level of human error, and to take some pressure off your shoulders and recognize that even if you're capturing 80% of the moves according to your trading plan, you're going to do great. You're going to have profitable results at the end of the year. And I really first saw this when I started working with some very successful traders that were making a lot of money from their trading, but they still fell, sometimes they didn't perform very well, or they didn't execute according to their plan 100% of the time, or, they didn't stick to their plan, they deviated from their plan, or they revenge traded a little bit. But at the end of the months, at the end of the years, over a larger sample space, they were still profitable, but they never beat themselves up. And really what it was, whenever they fell into this human error, what it was a nice little reminder to them of the risks in the market and the importance of their processes and plans. So a lot of these very good traders, they didn't mind slipping up every so often because it was a nice reminder. It's sort of like when you touch a hot stove, you're reminded, you associate pain to doing a behavior that isn't quite in alignment with your plan, and it reminds you of the risks in the market, and it kind of just makes you a little bit more diligent as a trader to stick to your trading plan and your processes. But the thing is, they don't beat themselves up. They don't cycle out of control. They're reminded of that lesson, and they go back to their trading plan and they go back to their processes. Okay? So if you're experiencing FOMO, the fear of missing out, remember the fear of missing out comes from the fear of missing out on your own positive expectations, your own expectations and the outcome. if you have an awareness of what these fantasies and expectations are, you bring them to surface just before you take a trade, and you humble yourself, you ground yourself by reminding yourself of really how, relative to everybody participating in the markets, how small one individual is. And that you may want something from the market, but billion other participants may want something other. So who are you to try and think that you can have what you want? And it's really a humbling process of, don't try and expect something from the market in terms of the outcome of that individual trade. Rather, focus on adhering to your trading plan on every single trade. Okay? Humble yourself. Be aware of your expectations. Humble those expectations. Use the free Bulletproof Your Mindset tool. Then have a clear trading plan, a mechanical trading plan, an edge that you can rely on. Use the 6-figure trading plan template I have in the description. And then recognize that you're a human at the end of the day. There will be a level of human error. You're not going to stick to your trading plan all the time. You're going to deviate. You're going to take trades that aren't part of your plan. You're going to be caught up in these outcome expectations every so often. But as long as you're sticking to your processes more than 80% of the time, and you don't beat yourself up, you don't spiral, but you use that as a nice reminder, you're going to do well. You're going to be profitable at the end of the year. Okay? Implement these lessons, and I guarantee if you do, you implement them properly, use the tools properly, you won't have FOMO when you're trading. You're going to be a more relaxed trader. You're going to be, when opportunities come your way, you're going to execute on them effortlessly. You're going to start to build consistent profitability because you have this more of this carefree attitude as opposed to trying to do everything perfectly. And, when you try and squeeze, the analogy of squeezing a toad, and you try and grip onto it too tight, and it just keeps slipping out of your hands. And I think a lot of traders are too rigid, they're too focused on doing everything absolutely perfectly, that when something doesn't go quite well, they beat themselves up and they spiral out of control. Whereas if you have a little bit more of a realistic expectations on yourself and on the market, and you have your plans and your processes set up, and you let the market come to you as opposed to forcing things, that's when you really start to build momentum. And that's where you don't have a lot of these psychological issues like FOMO and revenge trading and all these negative emotions that come as a result. Okay, if you found this useful, please like, comment, and subscribe. Share this video with your trading friends. Check out the description for the links in the description. Thank you for watching to the end. I look forward to seeing you all in the next video.